Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jayaram Krishnamurthy. Your quick dive into the happenings of the financial market. Now, folks, a lot of developments are consistently ongoing around the globe, but certain dastardly acts, like the ones in the northern India, should be strongly condemned. A response by the Indian authorities on the same is awaited. Having said that, and talking about the authorities, Putin has offered to halt Ukraine invasion in the light of discussions ahead, while rumors around Treasury Secretary Bessent expecting a de-escalation in the trade disputes and situations being unsustainable made the rounds. Although INR traded narrowly in the last 2 days, but the appreciation of the currency may have a different impact on the trade deficit. So, JK, I'd like to know from you, how do we see all these factors influencing the financial markets? What's your take?
Yeah, good morning, Shikhar. Uh, yeah, I think yesterday's better headlines and then some sort of damage control by US authorities have helped stabilize the markets. In fact, more than stabilized as far as the equities are concerned. As I said, the Treasury Secretary said that de-escalation with China is inevitable and the current situation is unsustainable. Also, he said the formal negotiations have commenced. Then there are 34 countries with which the negotiations are scheduled this week. And, another important headline from White House was that Trump wants to see the dollar remain as world's reserve currency, while the market will make its own assessment of its merits. The statement at least helps calm nerves on fears of a steep devaluation in the near term. I think the most important headline the market latched onto was Trump on Tuesday backing off from threats to fire Federal Reserve Chairman Powell. He said in as many words that he is not likely to fire the Fed chairman, and of course this is after days of intensifying criticism of central bank for not cutting the interest rates, and his negative comments about Powell last week had actually led to a steep fall of sell-off in the U.S. dollar and in the U.S. assets. Trump also said that tariffs on China will not be, and 145% is too high and it will come down substantially. Aside from the US authorities, the President Putin also offered to halt invasion of Ukraine across the current front line as part of efforts to reach a peace deal. So these were enough for a market which was almost getting one-sided on the dollar sell-off and the stock sell-off and gold buying. All these were seen reversing yesterday. U.S. markets rallied more than 2.5%. The main indices rallied. Then, of course, the yields had cooled off, and finally, even the gold saw some profit-taking selling, retreating about 5% from the high of 3,500 that was seen. And people started to raise. I mean, how much the gold can be, valued in a very short term. So I think the intent to take profit on a huge move in the recent days was compelling, and that's the reason we saw the gold fall to as low as 3,320 as well. So what's going forward? Of course, market will treat very cautiously. U.S. markets can, of course, recover because they have been sold off in a big way, and that's very likely. But we'll continue to watch the headlines and how the negotiations go. The tariffs are not going to go away. At what level they settle and what impact they will have on the U.S. Economy, the global trade, and the global GDP is what we are concerned about. And speaking of global GDP, we did have the IMF drastically reducing the global outlook, for the year 2025, cutting the rate of growth to 2.8%, down almost a 0.5% from the previous forecast. China growth reduced from 4.6 to 4%, and the US growth almost 1%, from 2.7 to 1.8%. So they're saying that the global economic system under which most countries have operated for the last 80 years is being reset, and that's a big statement, ushering the world into a new era. Existing rules are challenged while new ones are yet to emerge. So a huge announcement from US, which started with Canada, China, Mexico, culminating in near universal levies. These are big, developments that actually reached past levels that were reached during Great Depression in 1930s. while the counter responses from the major trading partners also significantly pushed up the global tensions. I think IMF has really analyzed these developments in a very pessimistic way. And of course, one cannot blame them, because I think the headlines have and the announcements have been so drastically destabilizing and disruptive. Yes, as far as the India is concerned, the downgrading has not been as steep as the other countries. And in fact, India downgraded from 6.5 to 6.2%. And speaking of India, yesterday, Indian markets also somewhat halted in their, big gains. Rupee, of course, has been halted due to the RBI's intervention consistently below 85.10. But for different reasons in India, of course. First of all, the disorderly terrorist act in the state of Jammu and Kashmir just be totally condemned. And what this leads to is some sort of a slowing down from investors looking ahead to what sort of a reaction the Indian government will take, and also how things will evolve going forward, because it's a very sensitive matter. So that's the reason I think the Indian markets can see some sort of a pause from their unrelenting rally that we saw in the last few days. And the rupee, of course, will react to the dollar's recovery, and so RBI continuously supporting below 85.10. And interestingly, yesterday's release of RBI bulletin showed that in RBI's forward maturities of forward liabilities in the forex had risen to as much as $90 billion, $90+ billion. And in the first month alone, it is amounting to about USD 14 billion. So I wonder whether to meet these liabilities, RBI would be looking forward to buying dollars from the market and meeting those liabilities, or whether they will be rolling them over again. So if they decide to buy at least part of it, I think dollar remains very well supported against the INR, and that could be actually some relief for the exporters who were actually worried that the rupee could see more appreciation, particularly with the forward premiums also falling. So I think we see a recovery to the USD INR in the region of 85-80 possible. But overall dollar, nothing changed as far as the underlying trend is concerned. It's just a pause. As I mentioned yesterday, the trend is still very much intact, but there will be pauses, and we are probably getting the one of those pauses now. We'll see how the US authorities interact with the various countries on their negotiations, how the China negotiations goes forward, and also the important thing would be how they handle the deficits and the debt. This is the biggest hanging sword as far as the US is concerned, because if they do eventually come out with the tax cuts also, there is no way in which market believes that the deficits will be cut down, despite so much talk of expenditure cuts by the government and all that. So nothing to say that the recent trends have reversed, but just that we have some relief rally, particularly in the US markets and other markets. Probably, investors can, who have been gone suddenly underweight on the US markets, might see some money put back into the attractive US assets, at least for some percentage, and that can support the US dollar for the time being. Thank you.
Yeah, JK, that was really good. And yes, folks, although there was some sort of damage control being seen by the US government, which stabilized the markets, but as JK mentioned, there are two big hanging swords for them, the deficit and the debt, which will be keenly watched. And all these damage control or the talks about negotiation with the 34 countries which are about to begin are definitely a good step, which kind of stabilizes the market, but at the same time, it does not really change the major trend at this current point in time. We can see some bit of time-based or price-based correction, as JK mentioned, but things need to evaluate further to suggest if there's a major change in the trend. We also observed that Trump has taken a step back from the pressure being mounted on the Fed chair, while he also mentioned that tariffs on the China can come down substantially. All these certain set of updates has led to some sort of profit taking in the gold, which made a new high of $3,500 against a troy ounce yesterday, and it even traded a low of USD 3,320. So good volatile movement in the gold is also being observed. While on the Indian front, if we have to talk about the gains in the Indian currency were kept in check by the central bank, and so much so, looking at the forward position, as JK mentioned, of $90 billion, they may need to continue buying some bit of dollars to match up with these liabilities, which can keep the appreciation for the currency in check, kind of a relief for the exporters as well. Uh, at the same time, the recovery or the pullback in the equity markets can be seen to take a breather or pause for the timing, as the certain set of developments and the Jammu Kashmir situation continues to find its way out. That's it for today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for listening in.